Hey,
Tricky
Nick.
Nicky snuck in on us. What's up?
What's going on? I am itching to jump in here. Should we just
Good,
jump
You
go.
want
in?
to talk interest rates? You want to talk dividend players? What do you want to talk? That's where we're going here today.
I want to talk everything. First of all, Dennis, I take issue with the statement you said earlier. The words "I know it's safe" scared the heck out of me.
I said I know it's safe.
Yeah,
Yes, several
What
times.
on which stock?
Dillard's.
Whatever. Yeah, that one.
The
Uh,
preferred?
yes,
The
anything.
DDT. The reason
Nothing.
I the
Nothing is safe. Nothing is ever safe. It's
okay.
safer than
Follow. Okay, those are not good words to say ever on a radio show. I know it's safe, but what I'm saying is, and this is how I look at these things. This DDT is I'm looking at the underlying company, Dillard's,
Right,
DDS.
right, right,
It's
right.
making new all-time highs. Is the dividend on their preferred safe when the underlying company is making new all-time highs? Yes. I'm not talking about the specific stock. I'm
Right,
talking about the preferred dividend, saying
right,
that that dividend is not going to be cut here anytime soon because the underlying company is making new all-time highs. So
right.
that's why I say I know that dividend is safe, at least for now, because that company is making new all-time highs. If Dillard's all of a sudden starts having problems there, and it starts to tank the stock, then I start to get concerned that, oh, maybe they
Yeah.
might cut the dividend.
No,
So
but
not saying that specific stocks,
I,
just saying that the dividend was safe.
not picking on Dillard's particularly, but here's the danger in starting to chase interest rates or dividends, because first of all, interest rates, yes, they seem like they're going to be here forever. I have a variable rate on my mortgage. I'm not too worried about it, and but the words data dependent from the Fed means that they don't even know what's going on. They're going to wait for the data and they're going to react accordingly. So we think we know everything we know right now, but the assumptions can be whipped out from under us, and then everything will change in an instant. Case in point, this company, Cveo, whatever, CVEO, that got killed yesterday. Well, this is an industry that everybody was 100% sure is the play of the decade. Cities were built based on it. The new oil boom here in the United States, and this is at the forefront of it. And bam, yesterday it gets killed. And with no with oil just going in 2 months from its high to half of its high. So we didn't know that. Nobody foresaw that. And it was built into no one's assumptions. I can guarantee you that. And bam, you just cut. So we can get blindsided, and we shouldn't just chase something just for the sake of chasing a yield. Getting paid to wait is fine as long as the assumptions hold. If the assumptions change, you can get a haircut overnight that you didn't foresee.
And that's
I,
why I would take a dividend on a preferred stock of
yeah,
a retail that's making new all-time highs as opposed to
right,
jumping into a C drill for a
right,
7% dividend where you have a
right.
lot more risk involved. So it's
I
all
had
about analyzing those risk factors. And
right.
yeah, nothing is ever 100% entirely safe,
I
but
had I had a friend of mine who was in Seadrill, and he got killed on the drop. And I'm sure he benefited on the way up, but then the drop was way more than the benefit. I can tell you that. So I'm just saying that you've done your homework on Dillard's. You've been chasing it tracking it for a long, long time, so you know it inside and out. But the danger is somebody hearing this and they can start chasing the dividends and not knowing the underlying assumptions and how solid they are. Even when oil, I mean, oil for crying out loud, Who saw this coming? No one saw this coming.
Fari.
Yeah. What?
Fari.
Oh, Fari saw this coming?
Yeah,
Well,
he.
he's superhuman.
Okay. No, and Nick, just let me to hop in here. I mean, when Dennis, and I don't know if you heard the whole segment. I mean, Dennis has been in this. A lot of the preferreds, a lot of things that we were talking about are things that we bought like during the financial crisis. So it's not, when, yeah, it was pretty scary when I bought Morgan preferreds at, 18 and a half, 19, and it went to $6. I'm thinking, what the hell did I just do? So we're
Right,
not, and you're right, and we should explain we're not talking about necessarily entering current positions here. Dennis was more
right.
talking about a position that he had in their portfolio where he knows it's callable at a certain price. He's not going out and
Right
loading
on.
up on the Dillards too. So I just wanted to make that point. What's
No,
going on with
definitely.
gold, Garrett or Brent? Because we're back up at 1,200. If someone could get on that, and find out what's going on in the gold market, Nick. So what else? What else in our conversation piqued your interest?
Well, that was the main thing. I was like, ooh, nah, I want to get in. So anyway, and then something you said earlier that the key to the bull market are levels, and I totally agree with you. But you know what's crazier than levels is these days traders are just looking at just trading sentiment more than actual levels and
Yep.
fundamentals. And a lot of things don't make sense during the day. Things that used to work don't work anymore, or sporadically work. Like a drop in oil used to freak markets out, and now they seem to trade up on a drop in oil sometimes, not all the time. So it's kind of confusing. So somebody asked me, so does anything make sense anymore? I said a lot of things don't make sense for the short term. So this is when you say, okay, I'm going to step back and stick to my fundamentals and trade macros and whatever I know, and don't change my rules just because the traders are changing theirs for now. And we seem to be ignoring problems until they hit the headline. Like we knew Greece was a problem. And then yesterday it hit the headlines, therefore they're traded. And then middle of the day, boom, all the strength that we had at the open kind of fizzled away when Greece came back into the headlines. I'm just saying that we should just back up and let's not change with sentiment and trade sentiment. That's what's going on, sentiment trading. And it just kind of like makes fools out of the people that do homework because it almost levels the field for a little bit.
Wow. Well,
How do you follow the sentiment? So you're saying you like sentiment, but how do you get a feel for sentiment? Do you like look at Twitter, stock, twit, CNBC? Where do you feel out sentiment there, Nick?
The one thing that's been happening for the last 3 days that I noticed is weaker closes. We used to rally into the close, green candles, last 5 minutes, bam, bam, bam. And recently it's been the opposite. I think the last 3 days I noticed that was it. So maybe they're starting to get tired. Maybe they're kind of like, it's almost like they're giggling in the background. I can't believe we're up here, kind of a deal. How much more can we squeeze out of this lemon? And they it's hard for the shorts. Oh, speaking of shorts too, you said you guys were worried about how to short. It's very easy to short. Just buy puts wherever you think there's going to be a debacle. You don't have to, do
Yeah,
any.
that works great on the stocks, obviously, that have
Yeah,
puts. But we were talking the thinner issues here too.
yeah,
And if you're
yeah,
interested in some of those, they don't have options. Then that's really where these short. You're right, Nick, because that's where these short the fees really start to get jacked up because when there isn't options, there's no alternative. And if you are bearish the stock, you've got to go out and short the thing.
yeah.
So you don't have that alternative where on obviously GE, Wells Fargo, there's all the puts and stuff. So that keeps the borrowing costs low for a lot of these companies. Not only that they're easy to borrow, but there's other ways to participate in the
Yeah.
downside.
yeah, let
And
me
I'm
hop in here on this. I mean, tough thing with puts though is the timing of it, Nick. I
right.
mean,
So,
you
so
go ahead.
with this is where you come up with calendars. You sell the short dated puts and you buy the same level, same strike level out the dated puts. So you kind of finance the longer dated put with some short ones. The exposure is just the money you spend up front. So if I wanted to short gold at 113, I'd sell next week's or January's put at 113 and buy the 113 in February if I thought gold was falling in February but not in January. This way I get into the longer dated put at a discount because I sold some here to finance the out one. And I'm protected if gold falls to zero. I don't have any exposures because I'm covered with the longer dated one. So the margin requirement there is nothing because you're covered. You're not taking open-ended risk. So if you think something is running up, you do the opposite. You do call calendars or put calendars if you're bearish. So if I thought that the markets were overextended here, but I don't think anything's going to happen the next couple of weeks, I may want to sell the January puts and buy February puts in case that we're going to drop in February, for example. I'm just throwing out examples. So this is how I would trade my thesis if I wanted to short something without having to worry about borrowing this and borrowing that and overpaying for my short. In this way, I have some conviction in it because if I'm wrong for a few days, I've got something that's benefiting rather than just outright losses immediately.
A couple questions out of the chat, and you may have mentioned this. Sentiment surveys preferred by you guys? Investors Intelligence or AAI? I mean, or the Twitter sphere or the lady at the grocery store or your cab driver?
I don't believe in any data that comes out of the media as far as sentiment survey this and survey that. I'm a numbers guy, and whenever they give me a survey, I have 100,000 questions before I can say, okay, I can take this data and use it. How many people did you survey? Where were they? Are they all traders and all this and all that? So it's all junk to me. So my sentiment survey is what I see, what I read. I test. You guys, I know you're on board with this. CNBC is a good sentiment survey. Just watching it, if
Cool.
CNBC is covering an inverse head and shoulder in the IWM, chances are that opportunity is passed. So everybody's now on board with the inverse head and shoulders in the
Shows you the
IWM.
crowded trades.
Right. So if what's his name, the
Kramer.
little no, not even. I mean, at least he used to trade. The I forget his name. Gosh, the nice guy and everything. But he's usually not a technical talker. He just covers the news and he's talking about an inverse head and shoulders that quote he sees.
Is
I'm
this in the
thinking,
morning or the afternoon? We're trying to figure out
the lunch guy, the lunch guy. I forget
Scott
his bit.
Wapner.
No, Bill something, I think. Anyway,
Bill Griffin.
nah,
Bill
don't
Griffin.
worry about it.
Okay.
So,
Bill Griffin.
anyway, so if they're covering that, chances are the opportunity is gone. So that's my sentiment gauge on that fact. On Apple is I tweet something. If I get harassed for tweeting something, like yesterday, I didn't even tweet anything negative. I said intraday price action on Apple does not look good because of this or that. I forgot the exact specifics. Boom, I get bombarded back. Well, you
Oh, you
sell it
can't
and
say
I'll buy
bad about
it.
Apple.
Yeah, I was like, well, maybe it's got too much love at this level. So that's another sentiment survey that I did, or it's not a survey, but how I gauge sentiment. So I don't subscribe to surveys to answer the question, and because I just can't trust the data because they can make it say whatever they want to say, and I can have it say exact opposite with the same set of data. So it just doesn't. It's not
Remember that
worth
Apple article you wrote there, Joel, like a year or two
Yeah.
ago, and you had like
it.
58. You wrote something negative about
No, it
Apple, and you
wasn't
had
at
like
50.
58 haters
No.
immediately, and
Oh my
they
God.
were
Oh.
tweeting at you. They were doing everything. They wanted to like hunt you down and kill you for that article. You had so many haters. You can't say negative about Apple on Twitter, Nick. Don't you know that?
Oh,
I
it
know,
wasn't.
and if they only knew, I've never bought anything Apple ever. I mean, it's just something that's not for me. The company is beautiful. It's a machine that makes money, but it's not for me. So anytime I tweet anything about its products, me not being for me, I get bombarded. If I tweet about the price, I get bombarded. It's just too much love in this company. And this is what happened when it first hit 700. There was so much love, and then everybody hated it until it got down to under 400. And it's like, what are you guys doing? The math doesn't even work out at this level. And
Yeah, it got crazy.
they're
Yeah.
calling for 280 and 250. Some girl, I don't remember her on CNBC calling. It's
Uh,
like, whoa.
my best comment on it was on Seeking Alpha that I got all the haters, and one of the comments was it was like writing style B plus, grammar B plus, content D, and I'm like and I'm like, wow, that it must be one of my old college professors or something. Looking
You
at
failed.
yeah, look at my paper. But we got another good thing in the chat here, and we talk a lot about with you. And let's get a little bit more specific to stocks. We got a question here about the open interest in options and how you use it. Not necessarily to initiate trades or take trades off, but just to give you an area. And really, the best example that we talk to a lot about is Apple. So tell us what you've seen in the open interest. We have abbreviated week with the holiday. Full day on Wednesday, folks. So don't think you're going to start your New Year's Eve partying soon. We got a full day on Wednesday. Off Thursday. How's the open interest shaping up in Apple this week?
Apple has had good resistance, and a couple of weeks ago when I came on your show, I said it's running against the open interest, and I don't know why. And every time that happens, I step away from it. And it ran, and then it gave it lit it up. So this week, what I see is I see resistance building at 113.
114. Oh, 113. Okay.
113, there's some resistance there. The high open interest is around 113. So 113, 114 should be a magnet area, meaning it's resistance on the way up and some support on the way down. There is decent support on 112. A lot stronger resistance at 115. I would say the strongest resistance is at 115. But overnight, the change was 113 was a lot stronger resistance, and now it's a little bit weaker resistance. But still, it should be around 113, 114. It has no reason to break 114. That's my opinion, and stay up there. And if it does, 115 is in as a wall against it. So the way I use open interest is I try to hide behind walls. That's what I try to do if I'm selling. And on Apple, I have not traded it because I don't have any conviction on the long side short term here, and I just can't trust myself in shorting it. So I don't need to trade it. So I just step away from it for now.
Okay. Why don't you help me out here on my Google puts here and tell me what you think? I did a long dated trade for me. I went all the way out to March. Can you believe I did that?
You,
And
you're an investor.
I
Investor in the
know.
short side.
And
Hopefully, you did it when everybody was hating it, when everybody was calling, "Oh, I need to see it break this level of resistance before I can go long it. Otherwise, it's going to 450." This is when I went long it, and I sold naked puts, which I never do. I sold the 450s or something like that, and I collected $4 for it. And then in 2 days, it was 60 cents to it.
yeah, no, I had it on, and I'm kind of kicking myself. I had it on in early December, mid December,
Yeah.
and my original target was I thought, wow, if it gets back to 500, I'm gonna have some nice profit in it. And it had 2 days where it dipped under 500, and I was on vacation, and
Yeah.
Isn't that always the way?
I put a couple orders out there, and it was just like, okay,
Are
well,
you in Goog or Google?
Goog, G-O-G,
Goog. Okay.
yeah, yeah. And I put a couple orders in there, and I missed like the high of the day. I mean, I'm like, oh, I was going to sell off a little bit. So I really tried to wiggle out at the 505 level with a nice profit, and they just laughed at me. And now, I mean, I'm still up on the trade, but I let a lot of profit go. What do you suggest? I mean, if it goes back to 500 again, you think it might crack, but just a little,
I don't. It's not going to five this week. Overnight. Actually, it built up some support around 530. So 525 to 530 band should support it this week. So we can take 1 week at a time. If you want, we can discuss this next week, and I can
yeah,
tell
I
you
want to
where.
discuss it with next week, Nick. I don't
Yeah,
like your answer.
yeah. This week it's got a roof at 535 and another one at 540, and 530 to 525 should be a good band of support. So if I were to short it, which I did, credit call spreads, I sold 562 and a half, I think, or 567 and a half. I forget. A $5 wide, 567 and a half. So that's all
So
profit.
you just say, "Come and get me." That's what you say.
How
Come and
far
get me.
out did you go, Nick?
That
Uh,
expires next week.
Okay,
So,
so you're
but
going
I'll
out. And what kind
probably
of premium can you get? Okay, so when you're saying I'm selling a 565,
I
and
got
I'm looking
35
at this.
cents. I got 35 cents.
Okay, so it's very low, but then you
Well,
cover
well,
yourself
here
out.
you say very low. Let me rephrase it, okay?
Yeah.
So 35 cents sounds pretty boring to most people, but in 2 weeks I can make 7.5% yield on the risk.
Right.
If I do that every
That's
couple of
up.
weeks for a whole year, you count the percentage
You're
for me.
selling lottery tickets out there to the market, and you're
Exactly.
analyzing the open
Exactly.
interest perspective to give yourself some protection that way. And then you always buy a little bit higher. That's why you do the spread, just
Right.
to make sure that, if the lottery hits, I'm not going to get murdered.
Right. So I'm selling insurance to the guy who's driving out in the desert and not the guy who's driving downtown LA.
Yeah, and that's why that strategy is so consistent long term. It's a
Yeah.
great strategy.
Yeah.
But you got to point out what's your total risk on that? I mean,
The total risk is $5 minus 35 cents, but the
yeah.
yield on that risk is seven
I
and a half
gotcha.
percent.
Y-
So any which way you slice it, you're taking a risk when you're investing. And speaking of gold, before we get off the subject,
Okay.
I'm looking. I don't know where it is pre-open, but 113 and a half ish is a level from which it bounced several times, and now it's bouncing on it from a lot lower highs. So lower high, lower high, lower high. So now it's squeezing. So there's a move coming, direction unknown. So flip a coin and decide if it's going to. I'm looking at the GLD period.
Got it. I got it. Yeah, I
Okay.
pulled it up. I
We're
had
1200 again on the
yeah,
gold
I had
futures
Brent.
here. We talked about the
Yep.
magnet, and we just kissed it here again. Got up to 1201. So we cannot get away from this 1200 there, Nick. We've been talking about this. This 1200 level in gold has just been huge.
Nick, final thoughts here. We're not going to have, the New Year's on Thursday, so this is the last time you're going to be on the show. A great contributor this year. We just want to thank you. Dennis and I try and talk about a lot of things education-wise, and then we have you on, and we get an education from you, and we really appreciate it, and I know our listeners do too. Do you have any final words of advice for the last two
Sure.
trading days
I
of the year?
appreciate the opportunity totally, and I'm easing into the end of the year. I'm just enjoying the last days. Don't create drama. You don't have to trade every day of the year. Enjoy the end of the year and start fresh next year. That's what I'm doing.
Okay, all right. Nic Chahine, one of the very well qualified market mavens. Check out his product, Create Income with Option Spreads. Nick, thanks a lot, and we will talk to you after the new year.
Excellent.
All right.
Thanks, Nick.